Hello guys, it's Jordi Principe here, and hopefully everybody is having a good day today. And what a crazy day today. The stock market opened red and now it's going up again. Tesla had a good news and it's still dropping. But this is the crazy moment when we as people, we need to start thinking about investing. Like, the goal of investing is to build wealth over time and to generate income to start investing for your future. It's like, I'm gonna give you an example. You start investing right now, like $1,000 on the stock market, and you do your research. You look for a good company. You put $1,000. Each share is worth $10. Let's say you bought 100 shares with $1,000, and then you just waited a month, 2 months, and then that stock that you bought for $10, you bought 100 shares. Each share goes up by $3 or $4. Give it an example, right? And you have 100 shares. Each of them go up by $3 or $4. If it goes up by $3, your 100 shares would make you $300 because it went up $3 each share. It went up from $10, it went to $13. You have 100 shares, you only spend $1,000, and in a few months you made $300 because the stock went up $3. Imagine if it goes $4. Imagine if it goes $5. Imagine if each share goes $10. Like, let's say you bought it at 10 and then you waited like 6 months, 7 months, maybe a year, and then the price of the share went from $10 to $20. And you have 100 shares still. You haven't bought any more. You haven't done anything. You just left it there and waited 6-7 months. It went from $10 to $20. Now just do your math. How much money your 100 shares made you? It just made you $1,000 because you waited almost a year for the stock to go up $10. And there's a problem with 2020 now. Like, the mentality of investing in the stock market in general has changed. Especially this year when there's, COVID-19, there's more people staying in their houses, there's people trying to make their money work for them. There's a lot of new investors out there. A lot of new investors. And some of them let themselves be influenced by the media or by other people, or just by the stock going down. Most people nowadays don't have the heart, don't have the heart for them to stop thinking about it. Like, as soon as it goes down, it breaks them. Like, they break. Like, they start panicking. They start making up stuff like super negative. And then the media helps with that. Like, it puts more fire. It puts more wood into the fire. But new investors, they don't even think about 6-7 months, 1 year, 5 years, 10 years. Most of the new investors, they don't even think about the future anymore. In 2020, new investors, a long term is a week, a month. Like, nowadays, new investors think that you can make money that fast without any repercussion. Like, yes, indeed, like, you can buy a penny stock for $1, $2 each. You can probably put $100 and double, triple your money. But that's just betting. At that point, you are betting with your money. Like, might as well just gamble. At that point, you're gambling with your money. At that point, just go to the casino and spend your money there, try to make money. Like, of course, if you're like a professional trader that you've been doing it for a while, yeah, the more power to you. But new investors, they think that the stocks go up fast because they've seen Apple, they've seen Tesla, they've seen Google, they've seen Microsoft. They've seen those stocks go up so fast that they think that most of the stocks that they're gonna put money on, they're gonna work just like that. Which it could, depending on how crazy the market is. It could. It definitely could. But the long term should be a year, 2 years, 3, 5 years from now. Like, yeah, if you can also do short term and do your research, find good companies, companies that are going down right now, that are good companies that drop their prices in the stock market. Let's say, let's give an example. Realty income was like around $70. Now it's $60, $62. So you can invest in companies that used to be high and they dropped because of Corona, and just wait a few months, maybe a year, maybe a little bit less than a year, and those companies should recover. Those companies should really recover, and they should make you profit. But nowadays, new investors do not think like that. They say, "Oh, I'm gonna make money in a month. I'm gonna make money quick in 2 months," and they don't have the heart when the share that they put money on because of the hype, it starts going down. Guess what? They lose hope and they sell for a loss. If you want to start investing in the stock market, like, you don't even have to spend money no more. Like, you can do paper trading. Webull, the app Webull. If you want me to explain that more, please let me know in the comment section. But Webull has something called paper trading, and it also has what's it called? Competitions for people. The people that have made more money on it, they get prizes. But what paper trading is like fake trading. It's like they give you an amount of fake money, like paper money, that you can start investing. You can do that on Webull for free. Like, you probably just put $10-20 and you might able to do that. And it's literally free. You can start trading, learning how to trade for free on Webull. But if you want to start investing, please, I advise you not to think. Do not make the mistake that most people have made, is that you can make money fast by investing. Investing takes time. Takes also, you can say, some sort of dedication, because it is hard to see the stock that you just put $1,000-$2,000, it starts going down, and then you see -300, -400, -1,000. And I know how it feels, because me myself right now, not only me, a lot of people out there in the stock market right now, you can say they're losing money. Investors kind of losing money. But this is what I want you to keep in mind. You only lose money when you sell. Don't sell. If you start investing in the stock market and the stock that you invested on, you do your research, and you believe that is a good company, do not sell. Don't sell. Average down. Averaging down means that, let's say you bought it for $10 a share, and then it went down to $8. You can keep buying the stock, and it will average down. Like in Webull, I don't think you can do that, because in Webull only like lets you buy the price of the share. Like, I don't know. I haven't used Webull, so I don't know too much. But on M1 Finance, Acorn, Cash App, me personally, I do not recommend Robinhood if you don't have a lot of money, because I'm noticing that Robinhood is really bad if you don't have a lot of money with them. Like, they barely help you. Like, my friend had like he's been fighting with Robinhood to cancel the account, and they taking a long time to answer. I use a brokerage called M1 Finance, and trust me, over there is fast, it's easy. It's a little bit different than Robinhood and Webull, because Robinhood and Webull you cannot do, and M1 Finance you cannot do trading, like day trading, you cannot buy or sell calls. You cannot do trading. You can only buy stocks on M1. But well, besides the point. Oh, and before I forget, this video is gonna be sponsored by me, by my book. My book is called The Truth About Investing. It's $2.99 as an ebook on Amazon. So I'm gonna leave the link of the Amazon in the description if you're interested. This book is really good. It teaches you about real estate and the stock market. It has a lot of tips for beginners, how to start, what mistakes to avoid while you start investing. So I recommend it 100%. So well, let's keep going. Here, this is my M1 account. Oh, just a disclaimer, I'm not a financial advisor, so if you're going to start investing, please do it at your own risk. Okay, let's continue. What I want to show you in my M1 account, I don't have a lot, of course, I'm pretty new investing in the stock market. I just started on February 4th, as you can see here. I just started with $2.99, and let me tell you something. I fell in love with the stock market. Yes, I had a lot of anxiety. Like, trust me, I had a lot of anxiety and a lot of stress seeing the stock market go down a lot. But guess what? That only affects you if you have the short-term mentality. Because if you have the long-term mentality, if you do your research and you invested in a good company, like I said earlier, that right now doesn't matter too much. Because long-term is 1 year, 2, 3, maybe 5, 6 years from now. That's the long-term. That's what you should strive for as a new investor. You know, if you put $1,000, $2,000 in the stock market and then you see it going down, of course you're gonna feel some sort of way, because you know nobody likes losing. I don't like losing, but like I said, you only lose if you sell for a lot. In this times of volatility, when the market is going up and down like as a V shape, this is when you need to remain strong. You as an investor need to remain strong. This year I made a mistake. I'll be honest to you guys. I bought Tesla and Apple as soon as the split happens because I thought it was gonna keep going up. Yeah, I was blinded. Even though I'm over here telling you not to do that, the reason why is because I did it. But like I said, I'm not gonna let it affect me because I'm a long-term investor. And during these 2 months, last month and this month, I've seen a lot of negativity in Tesla, Apple. Like, I've read it all, I've seen it all in the news and in YouTube, how people say, oh, the stock Tesla is never gonna go back to its price again. It's gonna go down. All of you guys are gonna lose money, bondholders. Sell now or you're gonna lose forever. But you see, that's negativity. You shouldn't let the negativity affect you, because in the long term, that price dropping shouldn't matter. Because you know well that Tesla and Apple, not only those a lot of companies have potential of go up and double, triple your money. But that doesn't happen in one night. That doesn't happen in 1 week. That doesn't happen in a month. That takes time and dedication. So my advice as a new investor is, please do not think that you can make money fast in the stock market, especially as a new investor, because that's how you lose money. Think about the future and trust me. Just if you see the market, like the stock that you bought goes down, like let me give you an example. I bought this company called Workhorse. If you're a new investor, you might not know Workhorses, but Workhorse, they sell EV, like they are into the EV company. They sell EV trucks for delivery and that's what they specialize the most now in this year. And there's a hype around that they're gonna have a USPS contract worth around $6 billion. This company is only worth like $3 billion. So if they were to get the contract, the price is gonna go up a lot. But I'm not here trying to tell you, hey, invest in Workhorse. No, it's that because of it, there's a lot of new investors that it's been like 2 or 3 months without any news about the USPS contract. The new investors are losing their mind. Like I bought this stock at 25. Remember when I told you about you have to average down when you buy high and then the stock market and then the stock price starts going down? What I recommend is you should average down. Like I bought this stock at a price of 25 per share, but it dropped to 19. Now it's back at 20. So I bought more. So now I'm at 22.75. Because what, I'm not worried if it drops. There's a lot of predictions that they're saying that it might drop to $7. But you know what? Why I'm not too scared of it, too scared of losing all my money, is because one is an EV company. You know, in 2035, you know what the government of California did. You know, he's gonna literally force a lot of Californians go EV by the age of 2035. So this is not the only reason why the USPS contract is not the only reason why I'm investing in this company. It's because of the future. This company is an easy at 35, 45 a few years from now, maybe a year or 2 years from now, just because of the type of company it is. But like I said, I'm not here to try to sell you work. It's just to show you what volatility is. I'm minus $151. Am I worried? Not as much. Do I get a little stressed when I see it going down? Yeah, of course I do. But I also get happy because I get to buy the stocks that I believe in at a cheaper price. So that makes me extra happy. Like when I saw Tesla, when I bought it at 429, and then I saw it drop to 390, it made me happy because that means that I could buy more. At that time I didn't. I bought other stocks that were dropping too. Like I bought more Apple. I bought stocks like Neo. I bought some fractional shares of Amazon. I bought Workhorse. And during this time, I saw Tesla and Workhorse. Like Workhorse, I saw it go up to $30, but I didn't sell. I saw Tesla going almost to $500 a share in these 2 months that I started investing on Tesla. I would say almost 3 months. But I didn't sell. You want to know why? Because I have the long-term mentality. I'm thinking about the future 1, 2, 3 years from now. And this is not, I'm gonna put more money on this stock. Tesla, Apple, all these good stocks that can double, triple your money in a few years. Like I said, in a few years, not in a few months, in a few years. The more you chase money, the more you're likely to lose money. But yeah, guys, that's all for today. Like I said, don't forget about to check this book out. I'm gonna leave the link on the description. It's only $2.99 as an ebook on Amazon. It has a lot of knowledge into it. Well, guys, that is all for today. Thanks for checking the video out. Don't forget to like and subscribe for the YouTube algorithm. And I hope all of you guys have an amazing day. And I hope all of us make money in the future. Stay awake, stay positive, and more than anything, start now. Bye. Have a good one.